Ladies and gentlemen, Seth Armstrong. Seth, thank you so much for carving out some time, man. Great to see you as always.
Hey, thanks, Tim. Always a pleasure, and Happy New Year, man.
Absolutely, absolutely. So, we jam all the time. We talk shop. We've got to know each other over the last couple of years or so. For the benefit of those that don't know Seth Armstrong, could you give a little bit of backstory on yourself and what you're currently doing for Deloitte?
Yeah, pleasure. So, name's Seth Armstrong. I lead our emerging growth company practice for the Central region. We focus on early to late stage venture capital backed companies looking for a significant exit, whether it be IPO, M&A, down the line, and had 15 years in venture capital private equity and kind of fell into it by accident, as many have. But yeah, love what I do, meet all different companies of all different industries. And yeah, it's just been a really exciting time and based out of Chicago. So to see and be a part of the future of Chicago is a really exciting part of my role as well.
But part of what I do day to day outside of the podcast or running a recruiting firm is I'll probably have pre-COVID 15 coffee meetings or lunches a week in downtown Chicago. That was part of my rhythm. Head down there on the train 3, 4 days a week, 8 o'clock, 9 o'clock, 10 o'clock, lunch, 1, 2, 3, 4 drinks with somebody back on the train home. And we ran across each other that way, I feel like. And then coincidentally, we live very, very, very close to each other. But that's how we crossed paths 2 years ago. So we've kind of been in and around the community. But maybe give the listeners some insights into where you're spending your time mostly, who you're spending your time with, the different parts of the ecosystem that you had mentioned.
Yeah, no, great question. And funny enough, to your point, Tim, I think anyone who's focused in this space would say the same thing. It's small town, big city, and and the first and foremost, I mean, your brand and your integrity is everything, right? And so, naturally, good people want to work with good people. That's how we met, right? Is having that view and just getting to know you that way and watching your firm grow and continue on to build the ecosystem too. So with that, yeah, that's part of it, right? Is to meet other really good people that want to support and build this ecosystem together. I kind of break it into those three buckets of, there's the investment community, there's complementary, right, service providers that want to serve and help these companies as they scale and grow, like yourself and Deloitte and other firms. And then also companies direct, right, and spending time. So when I divide that up of where I spend my time, it's a really focused strategy, right? Strategy, structure, people is what I always say. And with that, you got to stay on people's regular radar, but you want to add value. I mean, so it's always, these meetings, to your point, it's not just we're there to find the deal, but we're there to help add value and build the community together. And I think if you all genuinely go in giving more than you get, that's where your day is just fun, right? And it becomes exciting because at the end of the day, things start coming to you because you've just been giving all day. And and I don't know, I almost make it as simple as that, but I couldn't tell you, my other joke is if I spend time in the office, I'm not doing my job. So with COVID, that's been a whole new challenge, but also an exciting opportunity because a lot of people, right, can connect now virtually, easier than ever before. And to your point, the schedule's still, probably the same. It's just sitting in the same spot all day.
Totally. Now you've been tied to private equity and venture capital prior to your role at Deloitte, but you've been in and around the scene for quite some time. How would you kind of categorize the Chicago tech ecosystem and maybe how it's grown or evolved over the span of, say, even like the last 4 or 5 years or so?
Yeah, great question. And to be fair, predominantly more private equity in Chicago before. So the VC community has been around a long time. There have been well-known names that have been building this out for 20 plus years. I think kind of looking post the last crash, and that's probably where I've been more intimately involved in the financial markets. There's a lot of companies that came out of that and have just rocket shipped, and so I give encouragement too that that's potentially what's to come, right? I mean, there's a lot of companies that are doing great right now, being very successful. Technology, though, however, over the past 20 years is probably a better question. I mean, technology is just exponentially getting smarter, faster, more disruptive, more innovative. And so at Deloitte, especially, we want to be at the center of all of that. And so I look at it more as I'm trying to look for the clients of tomorrow. And over this past, I would say 7 years, and so there's companies that people have never heard of that are doing things that are just blowing my mind, right? I mean, it's such an exciting time. So I'm more excited what's to come for Chicago, in the next 5, 10, 20 years as well. But yeah, the ecosystem has grown substantially, I would say, in the sense of venture for later stage, investments. And we're starting to see some of those larger checks sizes. And I would still say is dominating the central region. Chicago is still the clear leader, but we have a long way to go.
So I often hear this like in our circles, right? It's like, it's hard to raise money in Chicago. You got to go to the coast, especially if you're like a consumer, like type focus kind of company. Chicago's mostly B2B SaaS, or if you're not like a logistics company or manufacturing, it's tough to kind of get looked at. And I don't know, I've been around, 4 or 5 years. I start to see some like micro VCs pop up, other VCs pop up, other names start to come into play for like at the Series A, Series B kind of realm. And this is something I hear too, is like, there's not a lot of like huge unicorn exits in Chicago that go to IPO. And that companies get off the ground, they get sold, at $50 million or $75 million. You don't even hear about it. And it never kind of gets to that level for that capital to be reinvested kind of back into the entrepreneurs, into the earlier stage companies. So you mentioned like, the companies of like tomorrow might be starting today, or they might be starting tomorrow. How does that cycle or that evolution impact some of the technologies companies of tomorrow? Are we on the right track? Do we need more venture capital? Like, you have access to the coast also. What are you seeing from the coast that might affect how we're running things here in Chicagoland?
Yeah, some several different points and questions in there too. But first and foremost, your point on the Chicago ecosystem compared to the coast, and kind of look at that way. One thing I think everyone in Chicago knows. I mean, we have companies that bootstrap. They know how to build, and they're not necessarily looking to go raise, and become a unicorn or go IPO, because early on, I mean, most companies don't think that way, right? They want to build a really great product and scale it like crazy, right? They want everyone to see them as adding value to the community. Whereas the Bay Area, I would argue, and maybe this is an opportunity for us to expand our way of thinking. They're walking around talking about building billion-dollar companies every day. I mean, that's just the way they talk, right? And so, as a city and as an opportunity for VC and early stage companies, I think to your point, there is a significant opportunity to scale that company to that level and then trickle back into the ecosystem. That being said, you asked about funding and, how do companies have to go to the coast and they move or they relocate. I would argue, COVID and other things have actually escalated the opportunity for the money to come here and to get known. And so the bigger challenge, I always say, is not to raise money. It's not hard to raise money. It's hard to execute on a really good idea, right? And so we have lots of ideas that are saying they need funding, but Chicago, on the other hand, has a lot of companies that are executing, and those are companies that I feel like they're a great opportunity to help bring the coastal money here, if you will. And then also we have a lot of money here too. This is a great city. We have a lot of old money. We have people that have been around that love this city, and they want to continue to invest and keep it local as well. So I always say we're just at the beginning, once again, of something really special.
I know you take a lot of pride. I take a lot of pride too in Chicago. I'm not going anywhere. Got family here and so on and so forth. And I feel like, I grew up in like the Bulls were kicking a lot of ass, like I have a lot of pride in Chicago and in Chicago winning. So when I hear like, oh, we're 10 years behind San Francisco in certain respects, or, Boston or New York in other respects, and we have a ways to go, or we're a B city and this and that and the other. Like I say, hold on a minute. Okay, well, if that's how it's viewed, we got to take a little bit of pride, and we got to figure out, what opportunities and how we got to increase what we're doing in different ways. But at the same time too, we just had statistics come out to say Chicago's made the best returns out of
Mhm.
any venture city by exit multiple, which is great too, and there's a lot that could be said there. So I know that the ecosystem is continuing to evolve and grow 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 over time. When you entered this space, I guess, venture as like an asset class, you mentioned like old money or like where people are
Yep.
putting their capital. Like, have you seen, that percentage of asset allocation increase over time, and people get more comfortable with making, because it's a risk. Let's be honest, it's risky. Like most
Yep.
companies fail, and you lose your money when you invest in an early stage company that fails. So have you seen like the risk allocation and risk assessment fall in favor of venture over time in this city?
Yeah, a great question. And first, I would look at liquidity right over time, and I think that's what I really go back to is kind of pre-financial crisis. Think of the last crash that we had. A lot of private equity shops ran into that issue, right? Because investors and LPs wanted to pull their capital out, and they're like, well, wait a second, we've invested in these companies, and so you're going to lose a lot more if you pull it out now versus wait, right? And so I would argue the risk is actually more about being patient, and looking at the over time. I think the VCs that I've seen locally in Chicago and others, that yes, there are some, if you will, Hail Mary bets, and let's see if this one will succeed. But for the most part, a lot of these companies, they'll either get acquired, like you said earlier, they'll get acquired for, maybe a smaller sum than they could if they had gone public like later and they'd scaled. But there's still going to be a lot of great success stories in the city. I think to your point on thinking through cash and an asset allocation, I think it's still a little bit young, right? To your point of where people will take that risk. But as they see more liquidity and they see exits and they see this materializing, you're going to see a demand for it. And we're seeing that already. I mean, we're seeing it across the board in private equity and venture. These mega rounds that are being raised are, just astonishing. And so just think of that, 5-10 years from now. And then, we didn't even talk about, SPACs and other things yet. That's the hot topic of the day, right? But that's because there is a lot of money out there that wants to be put to work. So there's just more significant opportunities now than ever, with the highlight, I think it was P33 in the article that was put together with PitchBook, highlighting those success stories to put Chicago on the map. And I agree. I hope that attracts, institutional investors and larger investors to come take a serious look at the companies we're building here in Chicago.
It's so interesting to see who makes it, over time. I'm sure you met with companies 3 years ago that are just like 50x the size that they were back then. It's like it's so cool to see over time. And I think we're all chasing IPOs, right? Like we all want to be working with the company that are rocket ships and kind of getting there. But by your trade, you're looking to target those companies, but you're also starting when they're super early stage. Do you see any trends in the companies that like end up, I don't want to say making it, or maybe, growing at a nice clip, or, following some sort of playbook? Or what are the variables that you see? Is it the management team? Is it the idea? Is it like the technology team? Is it the tech itself? What are some variables that you see lead to some success and some patterns along the way?
Yeah, no, I can't give my entire playbook away, Tim, but I'll share as much as I can. And I've commented to you before too that I do believe the more we learn from each other, best practices, and try to help each other in this process to help these companies, we're all going to benefit, right? So we want to see more success stories. So I only speak from my personal experience, but I know there's other experts on this topic, at funds within the city. For me, it's as simple as, I call it qualitative and quantitative, right? Qualitative is, do they have the right, leaders? They have the right investors? They're the right people involved, right? A lot of founders struggle to become CEOs. A lot of founders struggle to become, operational experts to scale the company. And so it's a really big challenge, right? If you're a first-time founder, you've never done it before, you don't have a co-founder, you're building it from scratch, to scale that company to be, 5,000, 10,000 people. I mean, to be these significant enterprise businesses that we have here in Chicago, it takes time and it takes leadership. So one's a qualitative, if they have the right background and the right pedigree, to scale, and there's a longer answer to that one. The second one is quantitative, right? Are they addressing the right market? Is this a business that, is a local business to, for the community? That's great, and that's its own category. But I'm talking about the technology companies that are going to disrupt the world globally, right? That are going to take all of us to the next level and make us a more competitive country, if you will, and those ones that highlight in Chicago are the ones that, are really poised to go for an IPO or a significant, exit. But that's kind of what we're looking for. And so for me, it's just getting in early, building these relationships, and, worst case, I'm helping out a great founder, scale his business and have a successful exit. And we never did anything with them, but we just helped,
Sure.
right? We were part of the process. Best case, we're along for the whole ride, and and they can be the next big success story of going public and trickling back into the ecosystem and watching that cash stay here in Chicago.
So for the benefit of the listeners that aren't as familiar with public markets, what an IPO is, why founders want to go the IPO route versus other alternatives. Can you maybe kind of give a little one-on-one on that, maybe starting with what an initial public offering is?
Yeah. So, really simply put, right, it's an opportunity to increase cash and liquidity in the open market. So, as a founder, you talk about raising money from a venture capital, or a VC or private equity or different groups. And so by listing yourself publicly, you have the opportunity to, get out there to everyone. So anyone can buy stock, right? Your neighbor can buy stock in your company. But also too, that creates better credibility and brand strength as well. You're on the public eye now, right? You're on CNBC, talking about whatever the latest topic is related to your industry. And so, but now you have the opportunity to represent that industry and build, if you will, better credibility and brand. It also increases overall market value. I would say attracting personnel, it puts your name not just locally, but it actually attracts personnel globally and even within national. So you can bring in, talent from the coast and other locations. And then also really significant opportunities for collateral acquisition. So looking at the ability to buy other companies or potentially increase your market share in a category leader. So we've seen that happen to where larger public companies acquire these, if you will, smaller companies, right, through a merger and acquisition. But if you're on the public side, you may have the opportunity to do the same thing, right? So it just creates an easier way to do that by issuing stock. And I won't get too technical today, but happy to jump on a separate call with anyone with questions.
All right. So
and if I already went technical, let me know.
No, you didn't. You kept it high level. It's super helpful. So all right, Lucas James Talent Partners is going to go public, and I go, hey Seth, I need help. What do I do here? We want to do this in 2 years. What goes into that? What's is it just like a phone call? Is it like an online submission kind of deal, or I'm joking. I know there's a ton more in that. What happens from there?
Yeah, you're right. It's for us, we kind of simplify it, if you will, down to let's have a whiteboard session, let's lay out a plan, right? And so 2-year timeline, that's a great amount of time, right? I mean, a lot of times we're actually coming in, it's 90 days, 180 days, it's a little bit of a quicker timeline. And so with that, I mean, the planning stages, you're going to bring in different parties to that conversation, right? The underwriters and bankers are going to have their view of when's the right time to list that company. You've got the exchanges, NASDAQ and New York Stock Exchange and others that are, the TSX, I've got to give my shout out to George, but yeah, you've got these other exchanges too that want to think through what's the right timing for your product. So you're going to get lots of different views, right? And so what we do is we try to bring in, the law firms, the bankers, the founders, we all kind of sit down and we say, hey, let's lay out a plan. And that's the fun part, right? Because then you can create realistic milestones and, and once again, keeping this high level, but really just think about project management 101. How do you divide and conquer to execute on a project? So if you think about it that way, it sounds a lot easier said than done. But part of that's going to be finances, right? Part of that's going to be, making sure you have the right talent and team. And when this company does go public, I mean, you're going to have a lot of filings and different things that are going to happen. So you got to be ready. And so you don't want to be caught by surprise. And then, I'm happy to get into the S1 and the whole process there.
Well, I think there's something to be said that, like, okay, private company, you have to file taxes. Everything's got to be tight there. You have to operate in a certain way under the guise of the federal government, and you have to comply with that. Publicly traded companies takes that up a notch, 10x, 100x. So to prepare a private company for that, I got to imagine is pretty intensive process that you don't want to screw up.
I think it depends, because I will say there are companies that are maybe not as well prepared as they think they are, to your point, to go public. That being said, some of the private equity funds and many of them, they run a very well-oiled machine. These companies could be public in a second. I mean, I think that's without said. So I think sometimes people underestimate, how valuable and how well run these companies are, under private equity. That being said, to your point, you're right. There's a lot of accountability and really it's just in the public eye, right? It's creating a discipline, which is why it's set up that way. I mean, the government and regulations are there to protect individuals like you and me. If we're going to buy a stock,
that's right.
We want to know there's no fraud or other things happening. And so that is where, the firms like the big four, if you will, or accounting firms come into play, because you want to know that the accounting is up to snuff, right? Everything's been done right and the financials are in order and there's no fraud, within an organization. So those are table stakes, but I would argue, once again, that's expected on the private sector as well. I don't want to diminish that. It's just as important. I would say there's probably just more checks and balances and requirements that are done for a public company than there are required of a private company, where there may be more flexibility because less people are involved in the company at that stage. And so there's more intimate one-on-one type conversations, whereas you may not be able to do that, when you have shareholders at the magnitude that a public company does.
What are some characteristics of a company, size, revenue, stacking order within an industry that, you have to kind of like check off to even be considered for IPO to be an option for you?
Yeah, great question. What's interesting about that is that's been disrupted really by tech more than anything, because you've had these companies that have gone public that were not profitable or not, they were not necessarily the typical, hey, this company's making hand over fist money and they're growing and scaling naturally. And you look back to, Amazon and Facebook and some of these companies. A lot of people forget when Facebook first listed, I mean, the markets almost crashed, right? And there was a lot of issues there and people were running for the fences and wanted to get their money out and wanted to pull stock. If you had kept your money in, you'd be a very happy camper today, right? So it's just interesting to watch.
Because it was unprofitable at the time, and it was
just the market, the reaction, right? I think it was just at that moment in time. And if you look back at it, it was a really interesting story, but there's plenty of examples like that. So I think it's more looking at the companies today to maybe answer your question. It's hard to say if there's a right revenue, right time. Once again, I think it's more about what are they trying to accomplish, in the marketplace. B2B business tech company might struggle a little bit going public early on because they have to build enough business, if you will, to justify this company is going to scale and grow. And people aren't going to know it, they're not going to be familiar with it. Whereas like a B2C company where they're selling direct to consumers, it's something you can explain to anybody, right? It's a very simple to understand, and the risk involved. If you go back to my earlier point on the S1 and some other things, a lot of this is listing out what is the risk of investing in this company, to the public markets. And that may be harder to explain for a company that's earlier, in their life cycle of their business, because they're just scratching the surface of opportunity to scale their company. So there's not a magic number. If I did give a magic number, I would say, I like to meet companies that are looking to grow and scale their business to be $100 million or more. Not that they have to be that to be an IPO, but I think it's more about their projections of where they're going. And if their business plan, even if they're 5 million, 10 million today, or even no revenue, we work with some clients that have no revenue, but they have projections to scale their business to that. And so there are foundational things we can do to help them get there, right? So that way, when they are there, you don't have to go back and try to recreate it. It's done. And that would be my biggest advice, is making sure, you get that discipline in place before, so that you can rocket ship.
Switching gears a little bit, I've gotten to know you over the past couple of years, and you're passionate about Chicago. You're passionate about technology. You're passionate about others, but I've really, seen you get kind of excited and fired up and passionate about diversity issues here in Chicago, jobs in underserved communities. I know that you're an active participant in Team for Youth. So can you talk a little bit more about that organization and what they're doing here in Chicago?
Yep. So first, as you always got to give your shout out to your mom and your dad, moments. But my mom was a social worker. I grew up in Washington, D.C., and my dad was a journalist. And I just remember being exposed early on to just always treating everyone the same, and just treating everyone, as a way of how do you help and how do you give value. And so, with that being said, I think Chicago, looking at DC, growing up there and being in the Chicago now, my whole family, my dad's family is from Chicago area. We have a significant opportunity and challenge ahead of us, in that we have communities that are not being represented to the level they need to be. And there's an opportunity with technology. And so Tech for Youth, really simply put, is to help, children and underserved communities reach their full potential through STEAM education. So science, technology, engineering, arts, and math. And I would argue, if you give them a kid now, if you help a kid that's a freshman learn to code and learn basic engineering, technical skill sets, they will be extremely well equipped, potentially, to go right away into the workforce. And so you may have opportunities where kids don't go to college, but they can go get a job. And so there's a huge opportunity to change these communities. And with that, going back to my mom, but she exposed me early on to so many different amazing people, at different walks of life and different points in their life, and just sitting down with them and listening and helping. And there's a challenge for all of us, to say, how do we help now, when I would argue COVID, with everything going on, the kids that need it most, it's these communities, the kids that, mom and dad are both working, they're out, they're in a virtual in front of a computer. I mean, you guys can figure it out pretty quickly. I mean, there's a lot of kids that need help. And so if we can change one child, life, we can change an entire family. And that's what I love about Tech for Youth and our ability to help these kids. We've partnered with Code Nation, which we're very excited about. So, for those that know that the Code Nation name, that's a national brand. And so to find out ways to help our local community, we've started with Chicago Tech Academy. Team for Youth has raised over $500,000 since it started. And a lot of people say, well, how do you do it? How do you raise the money? What does every tech company have? They have a ping pong table. So we started a ping pong tournament, as simple as that sounds, but it was a way to help the community be a part of it. And what I found is that creating easy bridges for companies that are very successful and growing, they want to be a part of it too. They want to help the community. Sometimes they don't know how. And so this was an easy way for them to be a part of it. And then also, going back to your earlier point of exits and watching money stay in the system, how do we keep building talent, right? This is a great way to build talent for the future of Chicago too. And so if we can create Chicago-based kids that know how to code and want to stay here and live here and be a part of the city, we're going to be building ourselves for the future too. So it takes a top down, bottoms up approach. And that's what I love about Tea for Youth. And, you hold me accountable, Tim. I hope to be a teacher someday as my retirement job. So I've said it there publicly.
I love it.
We'll have to fast forward 20 years and see if I did it.
Well, I think like we've talked about this a number of times, and, there's a lot that's happened in 2020 to shed light on inequality issues, lack of diversity in certain industries, lack of opportunity. And when you like really get down to it, it starts when you're young, and when you have what bridges you have, or what exposure you have, or what knowledge that you have, or what mentors that you have to show you what those opportunities are, and maybe take you under your wing a little bit. I think we can all, when between the ages of 5 and 21, probably speak to a couple different mentors that went out of their way for us before. And when you talk about technology jobs, that's the wave of the future for sure. Tech's not going anywhere. It's only going to continue to get bigger and bigger and bigger and bigger.
I mean, you'll know better than me, Tim. What's the pay, for a starting salary for an engineering role, at a tech company? I mean, these are lucrative. These are lucrative positions. This isn't, like a typical job, and so you can change an entire family. I mean, I really do believe that is that, creating these jobs, and so this is a huge challenge and opportunity, for us, to your point, to help these kids. So that's my challenge to everyone too. Don't be on mute, make sure that you're speaking out.
Well, I think, I have a lot of customers or companies that'll ask me like, hey, we really want to focus on our diversity issue, or give opportunities to other outside of the types of communities that we've hired from before in the past. And it's like, can you help me do that? And it's, part of it's like, there's different strategies to do that now, but this is a long game kind of solution that we're talking about. It's not going to get solved overnight. And you have to provide opportunities early on to different communities like Tea for Youth, in order to move the needle on what we're talking about here. And you have to start when people are young and provide those opportunities. And then you fast forward 5 years, pick your head up and see how much the needle's moved, and do it again in 5 years and again in 5 years. And I think, starting early and providing those connectivity points, to your point, can change lives, and they don't even know it yet.
Yeah, and I would add, Tim, to your point, that's one way to do it, right? There's multiple different ways, and so I don't discredit or challenge other people that are doing different things to advance these communities. If anything, it goes back to the VC mentality, right? It takes a village to raise a child, and so we all need to do it together. But yeah, you're right. Helping the kids in education is one thing. I also challenge everyone listening to, top down too. I mean, I've been asked to join different boards and organizations, and I say, well, who's on it, right? And they'll tell me, who's on the group, and I'll say, hey, you don't need another white guy. Actually, I know a woman. She's an awesome leader. She's a rock star. Let's have her be a part of it. I'll still help. I'll still be a part of the background, but let's put her on the board, right? You need a different viewpoint. You need a different perspective. And so I challenge everyone to think that way. I mean, I give credit to NASDAQ, making the announcement too of saying, now asking for one woman and one underserved minority to be on the board of a company, to go public. I mean, those are steps. To your point, we'll see how it moves the needle over 5 years, but it does take bottoms up and tops down approach. You can't just rely on one thing and sit back and relax and and wait for it to happen. You got to be active. So I do challenge everybody to do that and find one way or something they're doing, but at least we're talking about it, is what they say. But we got to do it. Talk is cheap. So let's be Chicago. Let's bootstrap. Let's get it done.
I love it. You're so spot on. We hit a number of different things today. I know you're super accessible. You like meeting new people. If someone hearing this wanted to reach out to learn a little bit more about you, Seth, or Deloitte, or Tea for Youth, where can they learn a little bit more about you or find you?
Yeah, I hate to be as simple as it is, but like LinkedIn, so such an easy way in a network. And I always give people my LinkedIn story, but my niece was in a movie, and that movie was connected to Kevin Bacon, and so everyone's 6 degrees of Kevin Bacon. So at least reach out to me on LinkedIn, and then at least you'll be 3 degrees of Kevin Bacon. So with that, it's a networking effect, right? And so happy to help. LinkedIn's an easy way. You can find me through Seth Armstrong, Deloitte. My contact information is readily accessible, and once again, happy to help, happy to build a community together, and offer ideas, for people to build their practice as well.
That's awesome, Seth. Thanks so much for coming in and the time, and we'll look forward to chatting with you again soon.
All right, man. Happy New Year. Talk soon.